Today I'm joined by Craig Johnson, our Chief Asset Officer here at PPR Capital Management, to take a look at how the Opportunity Fund has progressed through 2025. This fund launched back in mid-2023 to give investors access to an asset class that combines both real estate ownership with a recurring revenue model like Tommy's Express. Now we have 2 locations open and 4 moving through the pipeline, so I'm looking forward to talking with Craig about how the performance has gone so far and what we have to look forward through 2026. Craig, the Opportunity Fund was launched back in mid-2023 to leverage PPR's long-standing expertise in real estate underwriting, asset surveillance, and capital formation. It's designed to give investors both capital appreciation and a tax-efficient structure. As we close out 2025, how would you describe the progress we've made so far, and what stands out the most about this phase of the Opportunity Fund?
Yeah, absolutely. I think, it's been really exciting, I would say, this kind of first phase. I'd say we're about 18 months in now and kind of gone from something where, sure, we obviously had a background in real estate underwriting and asset surveillance, things like that, but car washes were new for us, and so was raising in this structure. So it's been really exciting to see the team kind of come together, both internally and our partners over at Olympus Pines and at Tommy's Express. Proud that we got the 2 locations up and running and ramping towards sustainability and profitability going forward. And also with those 4 developmental sites, excited to see them break ground, get built and get into action here in 2026.
And like you mentioned there, this is a new endeavor for us. So the team has had to implement a bunch of new systems to kind of make sure, monitor those sites and make sure they're staying on track. It's cool to see the team be that agile. So our first 2 locations are open and running, Charleston and San Antonio. And then we have 4, like I mentioned, that are in the development pipeline. From September to October, we saw a 10% month-over-month increase in memberships at both of those locations through community outreach and events like the Tunnel of Terror. From your perspective, what performance metrics are we looking at closely as these 2 sites move towards full stabilization?
Yeah, absolutely. I mean, I think there's a lot of metrics that we look at on a day-by-day basis, but the 2 big ones are cost per car and that membership count. One of the things that kind of sets car washes and especially Tommy's apart from a lot of other investments is that membership, that steady subscription revenue. You mentioned that the Tunnel of Terror event that we just had. And so for a lot of operating businesses, one great event like that, a promotion draws people in kind of one night. It lasted for about 3 hours. That's just a one-off, right? That's something that just leads to an influx of cash. It's a great night of sales, but then going forward, you're just hoping that some of those people come back and give you more sales later down the road. But, for us at Tommy's and through Olympus Pines, the goal there is that a lot of those people we've seen convert, like you mentioned, 10% month-over-month subscription growth is fantastic. And once someone has that one great experience and signs up and becomes a member, that's incredibly sticky revenue going forward. So I'd say the other thing is that month over month, we saw a 20% decrease in the cost per car. That's another aspect of scalability and another aspect of the membership model, because once you get to a critical mass of members, some of them don't wash their car at all during the month, right? Whether it's a summer month where there's just not much reason to wash their car, they do it at home, or they just forget to go, but they still, are highly likely to keep that revenue stream coming in. So a 20% decrease in cost per car and a 10 to 15% bump in membership count is fantastic, for just 1 month. And I think goes to show that, each time there's one of these events or an ice storm that leads to, salt on the road, people will come in and wash, or a pollen event, people come in and wash. Each of these kind of one-off events triggering more membership growth that then is sticky and kind of stacks and stacks and stacks and eventually leads to a very profitable and consistent site.
So it sounds like these community events like the Tunnel of Terror kind of act as a magnet for customers coming in. And once they experience the Tommy's experience, they kind of develop that habit and stay with the brand and continue to wash their car and keep their membership.
Yep.
All right, which is great. According to the latest Car Wash Pulse report, which is an industry publication put out by the International Car Wash Association, looks like about 69% of consumers plan to maintain their current car wash frequency, which is a pretty high number. So how does that number align with national trends and what we're seeing in our portfolio today?
Yeah, absolutely. I mean, I think what's critical about that is, 69% want to maintain their wash frequency. I think it's about 10 or 15% want to increase. But even among those who want to decrease, there's no evidence, if they're a member, that they're seeking to cancel that membership, right? I mean, if you look at that statistic, only 3% nationwide of existing car wash membership holders say that they intend to cancel their membership once it comes up for renewal, the next year. And it's just, it's kind of a part of the lifestyle right now, I would say, that once you've kind of taken the plunge, signed up, as that subscription, as that member, the incentive to cancel once it comes out of your bank account automatically every month just really isn't there. And so, uncoupling the desire to wash your car next month or the month after, depending on what season it is. The fact that our revenue isn't necessarily entirely tied to that desire and it's more consistent is something that we do see. We don't see a lot of cancellations at our sites, and it's kind of a key thing that sets us apart from other just operating businesses, and it helps with the takeout, at the close of the fund as well. It's the primary reason why, a Wall Street investor or some major company, it's not a VC company taking us out. We're not just an operating business. It's essentially just a cash flow stream. It's very consistent and predictable. So sets the car wash industry and Tommy's Express apart from a lot of other investments like this.
Yeah, and in my mind, it's kind of similar like a gym membership. Once you establish that habit of going, you're comfortable there, it's working your routine, like your likelihood of canceling the membership is very low at that point. So like I mentioned, so now the fund has 4 sites in development: Lincoln, Nebraska, Lexington, South Carolina, Mount Laurel, New Jersey, and Fairfax, Virginia. Can you kind of walk us through where those sites stand today and how the team's keeping their arms around construction progress, costs, and timelines?
Yeah, absolutely. I'd say I kind of bucket those into 2 different buckets. So you've got the Lexington, South Carolina site and the Lincoln, Nebraska site are breaking ground right now. So Lexington, South Carolina, construction is underway. They're pouring foundation and footers right now. They did electrical rough-ins and plumbing rough-ins. I think as we speak, those are going in. So, that's making a lot of progress, and we're looking to go vertical at that location with, assembling the actual structure either at the end of this year or probably in January. With a target launch date as far as actually opening the site sometime in Q2. And Lincoln, Nebraska, I'd say, is a similar timeline where construction is starting right now. It's actually part of a $52 billion real estate development of grocery stores, shopping centers, other retail. So it's kind of all tied in with that, but construction has started, and again, hoping to go vertical in Q1 and open that site in Q2, Q3 of next year. Mount Laurel and Fairfax are a little farther behind in timeline, but still, pretty imminent. Mount Laurel, we're anticipating getting the final permit for demolition of the existing structure on site by the end of the year, and that should begin in January. So that site will probably go through the process and open, I'd say, by the end of Q3 in 2026. And then Fairfax, Virginia, obviously, we've mentioned before, is the site we're most excited about. Has had the most hoops that we've had to jump through, which is why it's been a little delayed from kind of the initial projections. But, just to give some perspective, even before we took ownership of that site in the fund back last year, Olympus separately has been working on getting this permitted and approved, for over 4 years now. And the fact that it is so difficult, to get a car wash approved in Fairfax, Virginia is one of the reasons we're so excited for the performance of that site. So we got some good news recently. We thought we had 3 kind of hoops left to jump through in the permitting and approval process there, and we're down to 1 now, and that should be happening in January. And then, again, just need to get demolish the existing building on site, retrofit it, and again, should be up and running Q3, Q4 of 2026.
Yeah, it's extremely exciting. I know the demographics on that Fairfax, Virginia area are pretty high.
Yeah.
And being one of the only car wash systems approved recently is a natural moat for that location, which is cool to see.
Really high barrier to entry, yeah.
Exactly. So as development continues, Craig, across the 6 locations, the Opportunity Fund is becoming a fully diversified income-producing portfolio. As we look into 2026, what milestones or priorities is the team focused on to continue kind of driving overall value creation for our investors?
Yeah, I think that the big one we're focused on right now is financing. I think that's been an area where we here at PPR can absolutely add value to kind of the fund structure as a whole, because we don't build car washes ourselves and we don't operate them, but we do have a lot of experience with financing and commercial real estate. So we've been working over the past, essentially since the fund launched, to kind of restructure the debt on the sites across the fund. The way it had been set up originally and historically with Tommy's was kind of individual. So you would be doing, a bridge debt for construction on each of the sites and then refinance that once the site was completed, up and running and kind of profitable and operational. But we're hoping, in Q1, hopefully in January, we've been negotiating a broader facility that will cross-collateralize all 6 of the sites that are in the Opportunity Fund. So the benefit of that being a substantially better interest rate because it's lower risk for the lender, but also that it is kind of a construction to bridge to perm type facility. So rather than having to go out and proactively refinance each site individually as it kind of matures and hits stabilization and becomes profitable, there's kind of a built-in mechanism for that already. And so, we're looking forward to just having one lender going forward, a lower interest rate, and once those car washes are stabilized, that refinance event should produce cash out, significantly better cash flow to investors, and really help the fund kind of take off and get running ahead of an eventual exit event.
So it sounds like this quarter is really focused on building a solid foundation for this thing to continue to move forward and have a clear runway, which I'm sure our existing investors are very excited to see. So thank you for sitting down today, Craig. I'm sure investors will appreciate the update. If you want to learn more about PPR's Opportunity Fund, feel free to visit PPR Capital MGMT /schedule.